So I want to introduce Elihu. Elihu and I know each other for how many years, Elihu?
30 years.
30 years?
30
I'm not
years.
that old.
Well,
I know. The people on the camera look and say, you look old.
we don't feel old.
No, we don't feel old for sure. So Elihu, I asked you to come by because obviously you've done accounting for our businesses personally, and I know you know what you're talking about. So the audience who's watching this, some people are already in their own business, but I think the majority of people that are watching are considering either changing something in the business to business, or they've been working for someone and it's time for them to do their own thing. So I wanted to ask you some very basic questions of things that a new business needs to do. I know you're not a lawyer, but I know you interact with the lawyers constantly. Mm-hmm. So I would just sort of give you the floor as to the things that people do, and if I want to interrupt you, I will. I'll just ask you whatever I think the audience wants to know.
Well, first off, number one, I wasn't really trained as an accountant. I went to school, and my degree was speech communication and theater arts education from Monmouth University.
Okay.
And I took no business courses at all in school.
Okay.
And so after I moved down to Philadelphia, I became part of the ministry up there in Philadelphia. And while I was working in the ministry, I realized that I had an inclination to do tax. And so therefore, what I did was I took a course to learn how to do taxes and started doing taxes on the side for about 8 years, part-time. And then in 1991, I decided to go full-time into my own practice.
Right.
And from that time, I've really seen and met with a lot of people who started their own businesses. And a lot of times what happens is that people really don't really understand. They know they have to do something, but they're not quite sure exactly what they have to do.
Right.
And so therefore, what I try to do is I try to figure out exactly what is their specific goal as to what they want to do with their business and how they should go about doing it. And many times what happens is people think they have to start off up here and get incorporated and spend a lot of money to try to, and they have this grand idea, but in actuality, really they can start off down here and start off nice and simple and just determine where they're going from there. And that's the actual best way of doing it.
Okay. I want to ask you, I know the answer, but I know people don't necessarily think this is important. When you have a lot of business coming in, a lot of companies use bookkeepers. Mm-hmm. You know, our synagogue uses bookkeepers, our business used bookkeepers. How does a bookkeeper differ from an accountant, and what does a bookkeeper do that is so important for a business?
Well, a bookkeeper, most small businesses don't have the resources to have an in-house bookkeeper. And so really the best way to really start a business right is to hire someone who is a bookkeeper who knows how to handle books, know how to do the balances on the books and the debits and credits, and be able to really keep their books in order so that they are able to do their taxes and have everything pretty clear. And a good bookkeeper will actually pretty much guide the business owner to put their expenses in the right place and be able, categorize their expenses and their income so that they're able to really understand, the accountant or the tax preparer is able to understand exactly what the business is doing and be able to prepare a return based on the correct figures from the bookkeeper.
I know that in our businesses, Jackie has always been working with the bookkeeper, mm-hmm. or she was the bookkeeper. And as we got bigger, she didn't want to do the books anymore because there was so much business coming in, there was all this input. So we use QuickBooks, which
Right.
is very common for people to
Right.
do, and I recommend that to people
Right.
because it's pretty universal. And the thing that I don't think most business owners realize is, just like you said, they've got to put things in categories. You can't come home at the end of the day with a bunch of receipts in your pocket, you know, put them in a bag and say, I'll deal with it during tax season. It doesn't work that way.
Well, what happens more times than not is somebody will start a business, they'll go through the year, they'll come in and they'll have a bag full or a box full of receipts.
Right.
And it's not
That
categorized.
was me, first year. You
Not
were real
categorized,
happy to see me then.
and not categorized in their, and believe me, for them to basically give that box to the preparer, to the accountant or the preparer, is a very expensive proposition.
Why?
Because the preparer has to spend that time, which you're paying the preparer time versus the bookkeeper time. And
Right.
so the bookkeeper really is a very beneficial part of having a business and being a part of the business. And if you have payroll, a bookkeeper is a godsend.
Right. So I remember when I first started my first business, I came in with this box of all this stuff. And, you know, I figured, hey, I saved all the receipts. I did really good. And exactly as you said, you know, you wanted to die. Like, you know, come on. And a lot of receipts, people will find this out. When they actually go back through the receipts, they themselves won't know what category it's in
Exactly.
because they don't remember what this thing was for.
Exactly.
So I guess the best way to say this is, if a person gets a bookkeeper, even if they don't hire them full-time or even part-time, the bookkeeper will teach them what to do, and every day they go into QuickBooks. It's very simple. They enter in the information at the end of the year. We come with a little flash drive, we hand it to the accountant, and boom, everything happens very quickly because it's all basically done. And then you have to put it onto the, you know, the whatever the forms are with the IRS, which I don't
Right.
want to know anything about.
Right.
You know? So then I think the next thing that I think people probably want to know, I know when we started, I figured, well, we'll just be a corporation. I didn't know there was S Corps and, you know, C Corps, and you told us, you know, well, we could be an LLC, we could be sole proprietors. You gave us the advantage of having a separate entity in case we were ever sued, you know, but we wound up being an S Corp, and even though we built our business into the millions, it never changed from an S Corp for us.
Right.
So I know I don't want you to get into great detail, but can you give us some idea of the differences of why people start certain ways?
Sure. For most businesses, it depends on exactly what type of business you're planning to do. And for businesses that do not encounter a lot of liability, that means if they're not making something, producing something, for instance, if they're producing a product that is being used in the general public and it breaks and it hurts somebody, there's liability there. Or if they're producing something that
We
people
had a
consume.
nutrition company.
Right.
So with our nutrition company, it was like we could be very much sued. No matter what, they could say anything, and
Right.
so we became an S Corp right away.
Exactly.
Okay.
And that's why you would want to consider first, what type of liability are we looking at?
Right.
And so for those companies that are more service oriented, that really are not producing anything, but pretty much are there for a service to
They're a
provide.
handyman.
Right.
They're picking up groceries for somebody. They're
Right.
walking dogs.
Right.
Whatever.
They're not really, there's not really a lot of liability
Right.
in those type of businesses. And so therefore, what I would recommend usually for those people who come in, who have not incorporated immediately,
Right.
but who are just starting off, I would recommend that they just kind of start off simple, especially for the first year, because you really don't know what your income's going to be, and you don't know what your expenses are going to be. And so therefore, the easiest way to start a business that does not have a lot of liability around it is basically a sole proprietor.
Okay.
And the good thing about a sole proprietorship, which is basically you file it on your personal return, it's a Schedule C. You file it on your personal return, what's beneficial about that is that there's nothing else to file with the state or the government or anybody else. You can just actually start your business and just become a sole proprietor
Right.
from the get-go.
Right.
So there's really no need to worry about filing a specific, with the state of Florida. For businesses, you have to register, but you don't have to register with a Schedule C if you're a sole proprietor.
Okay.
So, yeah.
All right, so let me say this. When I was, my first business we started, we were still in Philadelphia. And we were told to incorporate in Delaware or I think Arizona or somewhere. I don't remember where it was. Now we're in Florida. And people will be able to contact you and have you help them no matter where they are in the United States. So why do people incorporate in Delaware? You know, why do people incorporate in a different state?
Well, actually, Delaware is a very corporate state.
Okay.
And so therefore...
What's that mean in English?
In English means that it's easy to incorporate, and there's not a lot of oversight on corporations in Delaware, which I think is like that in Nevada as well.
Nevada, that's where it was.
So
it's over there somewhere.
Yeah, somewhere
you know?
out there.
Right.
So that's why people incorporate in Delaware, because they have basically there's not a lot of oversight. They're very pro-business type of state.
Okay.
Every state has different rules.
Right. I know you were right away. Yeah, sure. Let's do it.
Sure.
Last thing I want to ask you is this: the individual who's contacting us, the individual who is watching this video right now, the individual who contacts you, are you able to do everything they need at the end of the year? And if they ever get audited, are you able to handle that for them?
All the time.
All the time.
Yeah.
Fortunately, you have never had to do an audit for us. Thank you, Lord.
No, but I'm there from start to finish, and if there's any type of letter from the Internal Revenue or from a state,
You're the one that looks at it.
I represent them.
Great. Elihu, thank you very much for coming in.
Thank you.
And for all those that are watching, we highly recommend Elihu. That's why we brought you on the show. And he'll take care of you. Thank you again.
You're welcome.